Hey everybody, Real Estate Ninja here. I hope you're doing great. Got a great story out of Market Watch. It's entitled Home Buyers Flee the Housing Market as Mortgage Rates Surge to the Highest Level Since 2000. It blows my mind how people think, or with their perception of a real estate crash, it's always price. It's always price. But they don't factor in the most important thing, and that's velocity. The fact that people need to be able to buy their home and sell their home and move up, which continues price growth. Right now, prices have stalled. Velocity has fallen off of a cliff, meaning that fewer and fewer homes are selling because nobody's got the money for that. And that is the sign that we are on the cusp of literally massive amounts of inventory hitting the markets. As a matter of fact, the nation's largest buyer of single family homes to rent them is now a net seller in 2023. The proof is in the pudding. And the point is you need to be there ahead of time if you're going to sell, and then you need to be ready and armed if you're ready to buy with knowledge, money, and you be prepared for that. With that being said, if you want to learn how to be prepared for that, I'll put 80% off links down below, $199 for the real estate crash course. You have to be ready for this. Check this out. Purchase applications are down to the lowest level in 28 years, industry group says, signaling bleak outlook for lenders. The numbers, mortgage rates rose for the fourth week in a row to the highest level since 2000 as the economy continues to show strength. What? Do you believe that the economy is showing strength? Type 1. If you believe it is crap and all those numbers are going down, type 2. Rates surged as the U.S. economy continued to show signs of resilience, which signaled to the market that the U.S. Federal Reserve may not be done with rate increases. And I completely agree with that, but for a different reason. And they don't want you to know is because our currency is losing value around the world. People are bailing from the currency, so the Federal Reserve knows that we have to offer them some reason to hold on to that currency. We got to give them higher rates, which means mortgage rates are going to continue to climb, and that is going to be horrific for people. In the last 3 years, I bought a home hoping that they were going to be able to refinance and just deal with the higher prices until they could refinance at a lower rate and then have a little bit of breathing room. That is not happening. People cannot make their mortgages now. The 30-year was averaging 7.31%, which in part dampened demand for home purchase mortgages to the lowest level since April of 1995. This is absolutely insane. We have now surpassed the numbers of the Great Recession. We are now during the recession era of 1994, 1996. That is very, very important for people to understand. Demand for both purchases and refinancing fell. The overall push down the market composite index, a measure of mortgage application volume, the Mortgage Bankers Association said on Wednesday. The market index fell 4.2% to 184.8 for the week that ended August 18th, relative to a week earlier. A year ago, the index stood at 270.1. Some key highlights. High mortgage rates are weighing on home buyers' budgets due to an increase in borrowing costs. Many buyers fled the market as a result of rates rising over the last week. The purchase index, which measures mortgage applications for the purchase of a home, fell 5% from last week. Rates hold little allure for homeowners hoping to refinance. The refinance index fell 2.8%. Who has money to refinance at these rates? Nobody. And if people are refinancing, think about it. It's because they're doing cash out refis to pay off debt. That's the only reason you'd be doing this. Rates rose across the board. The average contract rate for 30-year fixed mortgage for homes sold for $726,000 or less was 7.3% for the week ending August 18th. That is up from 7.1% a week before. The 30-year is at the highest level since December of 2000. Absolutely phenomenal. The rate for jumbo loans or the 30-year mortgage for homes that sold over $726,000 was 7.27%, up from 7.1% the previous week. The average rate for the 30-year mortgage backed by the FHA rose to 7.09% from 6.3%. Everything is rising. Think about this. If you wanted to get a lower rate right now and dive into a 15-year mortgage, even if you could even fathom that payment, right? The 15-year is sitting right now at 6.7. You are saving maybe 0.5% to jump into a 15-year. Those mortgages are going to be so underused in this, it's insane. Here's the big picture. The housing market continues to be hammered by good economic news. I think right now the government's going to realize that they shoved all this hopium into the markets, trying to get you to keep buying things to keep the economy stimulated, and it's going to bite them in the butt fast. And when it happens, it's going to move down really fast. Which is pushing rates up and depressing home sales. Higher rates also discourage homeowners from selling as their purchase power erodes when they look for homes to buy. As a result, both home buying demand and supply of home listings continue to fall, bringing the market to a standstill. Until the economy shows signs of slowing, it's likely that the housing market will remain in the doldrums. I gotta be honest with you, I think this is the greatest time in life, or in the world's history in the last 100 years at least, to be ready to buy homes, because you are going to see this cascading downturn in the market. And when that happens and there's blood in the streets, you want to be prepared with money, good credit score, and a clear mind. That's going to be the most important thing. Hope you got something out of this. Real Estate Ninja is out.